Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Review. Well, folks, please don't gamble your retirement based on the outcome of next year's election, because if a Democrat gets elected, let me assure you, you will be facing what I'm calling in my new book, the triple tax threat to retirement. And here are the three, and I'm going to be very brief, but these are very important to be addressed, because it's not a matter of if, it's a matter of when the next Democrat gets elected as president of our country, that you will see your taxes be higher than you've ever seen before. We know they're taxing on a financial tax. They're looking for a transaction tax. They're looking for a Green New Deal tax. They're looking for Medicare for all, universal income for all. Folks, somebody's got to pay for that. And if you're somebody listening that saved a couple $100,000 or more towards retirement, in particular, if you've saved it in a brokerage or even more particular in an IRA, you are the government's tax target, and you can avoid having that bullseye on your back. Here's why. The first tax of the triple tax threat is the repealing of what's called step up in basis, which means instead of your kids inheriting money, say from your brokerage account, based on the value of what those assets are at the time of your death, they have to pay the capital gain difference between what your original purchase price was and what the value of those assets were at your death. A massive amount of taxation. Typically, it's predicted in the Wall Street Journal's article that will produce at least a 50% or higher tax. The second triple threat tax to retirement and putting people's retirement on a tightrope is Biden's taking up where Obama left off, proposal also to double the capital gains tax rate. He wants it to go to 40% for certain incomes and assets. And I want you to really think about that, folks, because that's not a matter of if, it's a matter of when. And the third triple tax threat that is putting people's retirement on a tightrope, depending on the outcome of upcoming elections, that you shouldn't gamble your retirement on, and you can do something about it today better than ever under the Trump Tax Cut and Jobs Act, is what Senator Wyden out of Oregon has proposed, which is taxing the gain of growth on your assets. Not the gain because you sold an asset, just the growth of the asset. So picture it that you had a stock that went up $10,000 over the calendar year. He's proposing a 20% growth tax in hitting you for a $2,000 tax, even if the following year the stock drops in half. They're going to collect that each and every year, folks. It doesn't need to be that way. I think about Joan, it being the case study of a client of ours now for about a decade, and she had done everything right. She had socked away money in her 401k with a company match, etc. And her required minimum distributions were forcing her into a higher marginal tax bracket, paying more tax in retirement than the amount of tax she paid in her highest last wage earning years. Indirectly then forcing 85% of her Social Security to be taxed, and indirectly raising her Medicare Part B and D premiums. All translates into an extra $2,000 a month going to Uncle Sam, as opposed to her budget so she could travel to see her 3 sons and all of her grandchildren. Folks, it's your money. You've worked hard for it. Let me leave you with one final thought. If there was ever a time predictably to save tax, it's why we still have Trump in office. 2019 and 2020 are going to be vital strategic tax planning years to avoid these triple tax threats that will put people's retirement on a tightrope. Simply go to retirementprotected.com and I'll teach you one strategy that avoids any inheritance tax, any step up in basis tax threat, no capital gain threat of taxation, and no taxing the growth tax threat, folks. And there's no inheritance tax on IRAs like the government's also passed that will tax people at least 50%, our kids and grandkids. Go to retirementprotected.com and register. It's a complimentary log on and learn educational webinar where I'll teach you what many call the rich man's Roth alternative, because they've even changed the rules on the Roth, folks. Inherited Roths have to be liquidated in 10 years, just like inherited IRAs. Get the government out of the retirement equation for you. Disinherit the IRS from your IRAs and put an extra $2,000 or more back into your pocket so that your retirement isn't on a tightrope. Retirementprotected.com.